First, thanks to everybody for staying up late tonight. I know over here is midnight on Tuesday. Um, so everybody that's staying up late on the East Coast to listen in, thanks for joining us. But first things first, I want to start getting everybody on the same page in terms of risk management and how to apply it to thrive and uh, collaborate together within the Wolfpack. The group is grown, especially in the last month, to be very, very, or a lot bigger than I thought it would be, and especially with some pretty big capital that people are playing with. So I wanted to break everything down to assist not only the noobs that don't really know much about risk management that just started trading recently, and as well as the pros on brushing up on the risk management and applying it towards the pack. So, what is risk management exactly? My definition of risk management is uh, is basically trading techniques practiced in the market to mitigate unwanted trading habits such as FOMO, panic, overtrading, and greed. I'm pretty sure that almost everybody in here uh, lets one of those, if not all of those things, get in their way of not trading like a robot. If you're not trading like a robot, you're wrong. If you're having fun while trading, you're wrong. Trading is not usually very fun at all. It's very slow. Um, and you shouldn't have your emotions in place at any point in time in the markets because that's exactly how you FOMO in. That's exactly how you panic. And when you do come to a loss because everyone loses. It's just the name of the game. It's always going to go up and down. You're always going to have your winning streaks, and then you're going to have your losing streaks. But when you do have your losing streaks, it's how you make sure that you don't quit. And nobody in here should quit. I almost quit 3 times before in the past because I lost a lot of money. Um, and I just kept at it, kept at it, kept at it, and in the end I prevailed, and now I'm at where I'm at. Anyways, um, so starting off with risk management, one of the number one things that I always like to emphasize on extremely is the diversification of one's portfolio. A lot of newbies, even I did it, um, are all trying to get rich quick. They're trying to become millionaires overnight. And let me tell you right now, if you try that, I will guarantee you that you will get wrecked. You'll end up losing a lot of money or holding heavy bags that will keep you out of the market for an extended period of time until the market comes back up and you can unload those bags. Um, and you don't want to do that at all. You always want to have liquidity everywhere so that if you have an investment that you think is going good or you think would go good and then it just crashes and goes bad, like let's say Neo, for example. The Black Swan event came out, and I'll explain the Black Swan in a second. The Black Swan event came out where China banned ICOs and it crashed the Neo market even further than what it originally crashed. Um, and you can't really expect that, or you can't really trade on that, because as soon as the news comes out, um, you as soon as the news comes out, you basically are usually too late, unless you're like in China and you're like reading on their homepage and all of that stuff. um, you're usually too late. There's a lot of different algorithmic trading bots, like my boy Donnie's now popular Moonshot bot that is basically like a web crawler and finds all these news articles and things like that way faster than a human could. And unless you have a bot working with you or for you or anything like that, you're more than likely not going to win. So the best thing to do is to stay diversified, because if you went all in on Neo and it had this Black Swan event crash, and you had, let's say, 80% of your bags in there, and you didn't do any sort of stop loss, which is another risk management thing that I'll get to later, um, then basically you'll be sitting on the sidelines for a while until Neo goes back up. And almost everything in the market always goes back up, but sometimes it just takes a really long time. Like you can look at Litecoin. Litecoin was up at like $50 or something like that a while ago. I forgot how high it was. But then, it just bled down to like $3, like $6, some low amount. I can't pick it out of my head right now. Um, but it stayed like that for I think well over a year. Um, yeah, actually, I'll pull up the little Litecoin chart right now. One second. No, actually, it's not a year. I thought it did a big bull, but I guess not. But anyways, Litecoin went up to 0.0312 on when paired against Bitcoin and Poloniex, and then it bled for like for like a year, a little bit no, actually an entire over a year, all the way down to 0.003. So like 1,000% difference. And then it finally started going back up. If you bought at the very top of that and you put all of your stacks in, all your entire stack in, technically right now it hasn't even touched that top, it hasn't even broken that top yet. It's still going up. Um, so you would still be holding bags. So what I wanted to get down to with the diversification of the portfolio is to diversify enough to where you're comfortable with the gains that you would be making, with separating your stack evenly within a set amount of coins, but at the same time, to make sure that it saves you from the risk of holding too many heavy bags. So I'll just go off what I wrote a little bit earlier because I'm kind of wandering off right now. But basically, it's a double-edged sword. If you diversify too much, or over diversification, as I call it, um, you risk getting low profits on every single one of your rallies. So there'll be some people that come into the Wolfpack and they'll have like 20 to 40 coins that they're holding. And then they try to tell me like, hey, does this look good? No, it looks horrible. It looks absolutely horrible. You should not do that. Um, the reason why is because as a trader, if you plan on trading, I dare you to try to keep track of 40 coins or even 20 coins. That's going to be unbelievably hard to manage all of that all at once. Not only that, but if one of the coins does go up into like some crazy bullish rally, like a little FOMO rally, and it makes 300%, which is a great, I mean, it's common in crypto, but that's a great, ROI. Um, but it's only a small percentage of your stack. So you're making 30% or 300% off of like barely anything because it's split, your stack is split up so much. And what I like to do is basically I like to have a little stack that I'm comfortable with diversifying to make sure that if something goes downhill, I can just forget about the stack for a little bit until it recovers and then just trade the rest. Um, but if, nah, losing my train of thought. All right, anyways, um, but the good thing about being really over diversified is you get more reach in the market. If you have uh, 8 coins, let's say, as opposed to having 4 coins, your reach is longer in the market, and you'll be able to get those little runs, those big bull runs, those rallies. You'll have a higher chance of reaching them, because if you guys haven't noticed, a lot of the crypto scene is all about cycling through the coins. So, because there's news coming out all the time for every single coin, period. Like there's not every single coin, but a lot of the coins. There's always news coming out because this is an emerging market. Everything's brand new. Everything's fresh, like in development and all that stuff. So there's going to be a lot of news coming out. It's mostly all a popularity contest. So if there's one coin that has news coming out and it gets, shilled by, you know, enough people to where they gain that exposure of this news article that's coming out, then if you have 8 coins out there, you're most likely gonna hit some of those coins that get hit within the cycle. However, if you're diversified only into 3 coins or something, the chances of you get of those 3 coins being hit as winners are a lot less likely, obviously. But at the same time, if one of those 3 coins does get hit and goes into a crazy FOMO rally, then you make a lot more profits. So you kind of have to find the balance. I personally, after a long time of working with my portfolios and seeing what best works for me, I personally enjoy having 4 altcoins, and I'll do the study to see which ones have catalysts coming out soon, usually within 2 to 4 weeks, because that way it allows you to get in at a lower price. But we'll talk about that in another uh, lec lecture. Anyways, I usually stay within 4 altcoins, and I always have Bitcoin. You always, always, always want Bitcoin. If you don't have Bitcoin at all times, you're wrong. Bitcoin is the main pair within the altcoin market. So that's your liquidity. That's your money, you know? Would you ever throw everything into the stock markets and not have play money on the side? No, of course not. You're always gonna want money, or you'll be broke as fuck. Um, so you want to always have Bitcoin. I like to keep my Bitcoin stack around 30%. That allows me to have enough liquidity to not only, you know, feel safe with my portfolio and wanting to put money in or wanting to invest in another coin that may be having some crazy news coming out. But it also allows me to mess around with with the walls on the logbooks. It allows me to put up a little fake spoof wall to kind of help pressure the market to go up and up and up and up and up and up. And then, if it comes down, I just remove the wall, et cetera, et cetera. That's a little bit more of an aggressive trading tactic, but it's something that really, really, really makes a huge difference. So I highly recommend that you guys keep a comfortable amount. If you don't have, a lot of Bitcoin to try to throw up spoof walls, then that's fine. Just keep it there for the liquidity and the risk management purposes. Um, so I usually have 4 alts. I usually have about like 30% into Bitcoin. And then I usually have probably like a little bit of Ethereum or a little bit of Litecoin. I don't consider those altcoins per se, mostly because I trade them against fiat all the time, and they do very well on GDAX. Um, but they're definitely one of the top coins that you'll see get in sync with Bitcoin or move against it fairly often. But anyways, 4 alts, Bitcoin, and then either Ethereum or Litecoin. That's just my personal preference. A lot of you um, can play around and see what you guys like, but that's what you'll see me trading on the Wolfpack. Um, Let me see. The filter through strategy, I think I already told you guys about that, where basically the market always goes in a cycle. As soon as one is over, then you put the other, you move on to the next one. Or actually, let me touch up on that one more time. The altcoins. If I have a portfolio of 4 altcoins, I already have them set in mind for which one is going to have the catalyst first. So for this example, I see Syscoin as having the most recent catalyst coming out, which is on the 12th. So my plan is to basically get into Syscoin, have the whole catalyst, boom up, and once it starts going up, I'll start taking profits along the way, and with those profits, I'll just redistribute it to the rest of my 3 um, cryptocurrencies, and then I'll also put a little bit into Bitcoin just for liquidity purposes and to keep profits. So when I do that, I scratch off one of my altcoins on my portfolio, and I only have 3. So now when the next 3 hit, which should be coming out like a catalyst one right after the other, not all at the same time, When the next three hits, then those profits that go up will be even more. And then, the next one, cross out, take a little bit of profits, put it back into Bitcoin, and then put the rest into the other two. And then and usually the markets crash before I even get down to one. But if you can get down to one, then get all the way down to one, and you guys will be making crazy, crazy profits at the end of the month. But that's my strategy again. Everyone has their own thing. Another really, really important risk management tool that I personally don't use that much because I've been burned by it too many times, but I definitely think that a lot of you rookies can uh, can find this useful is stop losses. Stop losses are lifesavers. Um, Again, I don't use them that much because they've burned me before in the past, but I also definitely need to start using them more often um, for situations like Monaco. Those are the only times I ever used stop losses, even though I didn't this last time, which burned me. But I can live with my losses. So what I do though is I set a mental stop loss, not a physical, usually a mental. I tell myself like, okay, what is the percentage like that I'll allow of a loss, like 10, 20%, etc. And I always track the TA to make sure that it's not bearish and going under that. If it's bearish and going under that, then I'll cut my losses quick at like 10% or at my entry level and try to not sustain any losses at all. If I can get if it turns bearish at any point and it's about to hit my entry target, then I usually take profits out completely or take my position out completely because if you sustain any losses in the market, it'll take you twice as much to make those losses back. So if you have $100 and you sustain a 50% loss, you're gonna have to make a 50% uh, ROI, return on investment, in order in order to get back to the simple $100 mark that you were instead of um, just a regular 50%. Anyways, I like to set my mental stop losses usually around like 10, 20% if something just refuses to take off and it just kind of bleeds down a little bit. Then I'll just be like, all right, well, the market doesn't really find this interesting. I'll take my losses, move it on to the next one. Um, However, for physical loss, where I should have done it and I didn't do it, and I should have told you guys to do it too. I'm sorry. Um, was with Monaco when I went to sleep that night, because I don't know if you, and I know some of you guys remember. Um, I told you guys to enter in if you're gonna bet on the rumor to enter in with only a percentage, with only an amount that you would feel comfortable with losing. That's why I didn't set a stop loss because the amount that I went back in, I was perfectly fine with losing. It was basically just the profits that I made from Monaco. Um, so Monaco was basically like it wasn't profitable for me at all, but at the same time, it wasn't really a loss either. So that's why I didn't really care about setting a stop loss since I just don't like setting them. Um, but before I went to sleep and I told you guys, oh, if you're gonna enter in, et cetera, I should have also told you guys, and I also should have set a stop loss uh, where the support was at. Because while I slept, and I definitely advise using stop losses while you sleep in certain situations like this with the catalyst. While I slept, the news came out that the Visa crap was basically a hoax. Um, and since I wasn't there to trade, that stop loss would have saved me quite a bit. And at the same time, it would have saved everybody else quite a bit. That's why I think that when it drops, usually when you see those really big like lightsabers, it's not everybody just selling all in one go. I mean, a lot of the time, yes, a lot of people do that, but a lot of those are also stop losses being triggered. It just has like a chain event that just sells everything down, just dumps it. And that saves people from being the other people like me who sells way under because we forgot to set stop losses. But those are the times that I recommend putting a stop loss in is is during these catalyst events where you're kind of buying the rumor and the rumor comes out and it's false. That's very, 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 very important and good time to set stop losses. And like I said before, you want to set it probably like 10, 20%, depending on how risky you want to be, under the support, under the fib line support or the trend line support. And I'll teach you guys all of that in the next few lessons. Um, Also, the reason why I prefer a mental stop loss instead of a physical one is because of something called stop loss hunting. So I'm sure you guys know there's a lot of fucking whales in this market, and they like to manipulate the price or play with the price and the market to try to get people out of their positions as best as possible or as much as possible. If if someone or a group is contemplating a big rally up for something, like let's just say Bitcoin, right? And it's about to hit like a breakout point, but they know it's gonna, go to the moon. They will dump it, and usually it's like a program that can do these things. They'll dump the price down like heavily, just so that it breaks the trend line quick enough for all of the stop losses to get triggered and drive the price down even more, and then they'll buy all of that right back up. So then they accumulate like really quickly and get people out of their positions right before they start the rally. And then after that happens, there's a big bullish rally that just continues all the way up to wherever. And then the little loss that they take right before that with the stop loss hunting, they make it all back at the very top and they can just dump it on everybody. That's a whale strategy and a whale tactic that you need to watch out for. I personally have never actually been stop loss hunted, but I've seen it multiple times. Um, Also, the market itself is just extremely volatile. What has happened to me a lot of times is I'll set a stop loss like right at like a support or under a support, thinking that it'll be a safe position to set a stop loss. And then I'll go to bed and then I'll wake up and the market dips just enough to trigger my freaking stop loss and then go to the moon. And if you want to be upset, that will piss you the hell off because usually you end up selling at a loss and then it goes to the moon and you're just like, oh my God, what the hell? And you FOMO in sometimes and it's just nasty. You don't trust me, you don't want to experience it. Um, so stop losses, very, very, very important. I prefer mental. I sometimes do physical. I You guys just need to work it out and see what works for you. Everyone trades differently. Another risk management, a big thing on risk management is take taking your profits. So it's very, very important to take profits because it protects you from a lot of crazy, crazy volatile events known as the black swans. A black swan event is basically just uh, a crazy event that no one can predict. It's kind of like a black cat crossing the road. It's just like bad luck. Um, China coming out with banning ICO, some people could have seen it happening, but no one would have known exactly when it was going to happen. So that would be considered a black swan event. Um, Jihan Wu coming out and saying that he's gonna, you know, try to split a hard fork or whatever during the last big BTC bear market. Could people see it happening? Yeah, sure, I'm sure. Could people tell when it was gonna come out, when he was gonna say that? No, unless you're like insider trading, that's no. That would be considered another black swan event. So taking profits along the way, and not just profits into Bitcoin, I'm talking about profits into cash at the same time. Taking profits along the way, it protects you from these black swan events. Um, they happen a lot. I'm not I don't trade stocks or forex, but I think that they happen more frequently than stocks and forex, just due to the nature of the cryptocurrency space. Um, but it is very, 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 very important to take profits out little by little. People always want to like just hold until they get to the top and they want to sell the tippity top and they want to buy the very bottom. Stop it. If that's your goal, if that's what you're trying to do, fucking stop it. It doesn't work. That's chasing fool's gold, and you're gonna end up fucking on the suicide prevention hotline if you try to do that. It's extremely stressful and it's just not worth it. So instead, focus on building profits little by little by little by little. In the end, securing profits slowly over an extended period of time will help you grow exponentially. So you'll be making a lot of gains come the future, way more gains than if you were trying to sell the top, buy the bottom, and you just start taking on like these heavy losses and these heavy gains, and you just do like this zigzag pattern um, in terms of your gains and losses. If you just win slowly, little by little, and just stack up all your gains over and over and over again, you'll become a hell of a lot richer, a hell of a lot quicker than trying to get rich overnight. And it won't fuck with your head either, because a lot of this stuff fucks with everybody's heads. Trust me, I know it fucked with my head. Um, so that's the good thing about taking profits. I personally, whenever I take profits out into Bitcoin and into um, the rest of my portfolio. So if I were in Syscoin right now, right, and it skyrocketed up like it did, I'd be taking a little bit of my profits out, little by little. And what I mean by profits is basically the whole freaking my entire investment. Not my entire investment, but I take out a portion of the entire investment. I don't know if it's just profits or if it's, part of the original investment itself. I just take out whatever the hell I want to take out, whatever I feel comfortable with taking out. So so I'll be taking out profits and the investment little by little, basically shortening my position over time. And I split it up into um, three or less different amounts. One goes into Bitcoin. One stack of it goes into Bitcoin. Another portion of it goes into one of the, and then two portions of it goes to the other two coins that I'm holding on, or yeah, or three coins, whatever. I can't do math right now. My head's spinning. Anyways, I'll take out the profits and I'll put it onto the rest of my portfolio, including Bitcoin. And then Bitcoin, I pay myself weekly a a salary or whatever. So I'm even taking profits out of that. You always want to be taking profits out of everything. Don't keep everything in the markets. We are in a bubble. Do not kid yourselves. We are in a bubble. If the SEC came out tomorrow saying that, oh, they're going to regulate everything, then the freaking market will crash. It doesn't matter if it's, international or whatever. The market's going to fucking crash. Um, so don't get stuck in the market with no profits at all. We play this game to make money. If you're playing this game to make Bitcoin and you're not giving yourself money, then what's the point of playing the game? Um, anyways, so I relocate the rest of my funds or all the profits into the rest of my portfolio so that when they go into a bullish run, then they'll make more profits as well. And then I'll pay myself even more. Yay. Um, as far as risk management, it also psychologically defends and protects you from panic. If you see that shit's going on a FOMO run, like skyrocketing up into the air, and you take profits out little by little, I can guarantee you that when it starts coming down, you're not gonna be like, holy crap, oh my God, I need to dump it all now because it's gonna hit zero in 2 minutes. You're not gonna panic sell because throughout the entire time, if it does dump or drop down a little bit, then you can be like, oh well, whatever. I've already secured a lot of profits throughout the entire way, and it makes you feel 1,000 times better. I will guarantee you. So make sure for your mindset, take some fucking profits out. Um, this is a lot of this is also referred to as quote unquote sell the news. A lot of buy the rumor, sell the news. Basically, it's just catalyst trading. You buy on the rumor that there's some sort of news or event coming out in the future, in the near future, and you buy in low and you just accumulate. And then as people get exposed to that news and they start FOMOing in, you 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 put up sale orders for all of the bulls that are coming in that are fresh in the market, the noobs basically that are coming in and pumping the price up. You just put up sale orders and they'll just eat it away like super, super easy. That's called selling the news. It's usually for whales that have a large amount of capital to play with and in a really big position, and they can't just, sell everything all at once because then it'll dump the entire position. It'll mess up the price. You want to get out at the best price as possible. So if you're setting sell orders and people are chomping into it, then at least you have that one sell order at that price instead of destroying the buy order logbook and bringing the price down even lower and getting a way lower price. Um, but that's basically it for taking profits. And I don't have any more that I wrote down. So I'm just gonna go with the top of my head on stuff uh, with this. That's basically the 101 basics of risk management. Um, Now what I wanted to talk about is how to incorporate all of those basics onto the Wolfpack channel, group, club, community, whatever you want to call it. Um, there's a lot that's been going on lately with the size of the wolf pack, with everybody FOMOing in on any single little call or even a mention of a coin, um, and completely dumping the price down whenever I say, take profits, or whenever I say exit your position slowly. Um, that has to stop. And I can't force you guys to stop. I can't force you guys to do anything, obviously. But what I can do is to teach you how not doing that is for your own benefit. So let me show you a quick chart on CIS. I believe someone said that I called it in at like 54 or something like that. All right, so this is the chart of CIS, right? If you zoom in, if you click it and look at it, I called the call, I think a little bit lower, I think around like 5,200, but by the time a certain individual got in, it was like 5,400. Um, so when you look at the green dildo on 5,400, and you look at the volume down, the first arrow going down, that big green volume, that's us. That's people FOMOing in. And then if you look even lower under it, the RSI is capped out. So people are FOMOing in at the top of the RSI. Like that rally, that big rally push right there, that's not natural. That shouldn't have rallied up so strong like that at the top of an RSI, but it's fine. Shit happens. But anyways, if you look at the very first green dildo, and then you look two candles more to the right, you see another tiny little green candle and a giant wick that goes all the way down, basically under 5,400. So if you would have just waited, if like the call goes on, you look at the charts and a green dildo's thrown up, and you see stuff like the stock RSI, and then you just wait, like just have a little bit of patience. This would have taken what, like two hours basically to have waited. Um, and like wait 2 hours or wait however long. Just put like a buy order, probably like halfway through wherever the first candle started, wherever the FOMO candle started. Because what happens is when we throw up a big candle, and it's an unnatural one, like the ones that we had, um, the market's gonna want to take profits out of that. So there's gonna be a lot of people that are gonna be like, holy crap, it's like a little FOMO run, a little FOMO candle, whatever. And then they're just gonna sell because they want to take profits. And once they sell, the price is gonna dump down a little bit, but you're gonna be there to catch it. And your position when you wait and you just put a sell or buy order halfway through the candle or whatever the case may be, um, would be a better position than if you just would have bought in at the top of the candle and just grown it up even more and more and more. Because a lot of you will find that as soon as you buy in, especially like in like a little FOMO call like we had today, even though it wasn't even a call, but um, you'll find that as soon as you do that, you'll see like a giant green dildo or whatever, and the next thing you know, it'll start selling or it'll start dumping down. And you're just like, oh my God, what the hell? That's because people don't know that we freaking called it, or maybe some people do, but um, people don't know that we called it. They just see a green, they just see profit. They just see money. So they're gonna be like, holy crap, look at that. And then they'll sell it and they'll dump it down. And yes, it may go up even higher because a lot of more people will start FOMOing in. Or I mean, I don't know exactly if we were that entire rally. I don't think so. That's a lot of volume. Um, but people will sell and take profits, and it may not even be people. It may be robots. It may be arbitrage bots. The entire market is filled with arbitrage bots. So if it spikes up unnaturally on Bittrex, the price goes up, whatever, 10, 5%, whatever the case may be. There's going to be arbitrage bots that are going to see that and notice that, and they're going to sell it on Bittrex just to buy it on Poloniex and then send it again to Bittrex and sell it there because of the price difference. And then over time, that'll equalize. But you can use that arbitrage bot's algorithms for your advantage. All you have to do is set buy orders and just wait until the arbitrage bots start dumping on your calls, basically. So you'll keep the price sustained so that we can all get in at around the same price. You know, you can get in at a better price, and then um, once it is time to start taking profits or whatever hashtag dump it, then then at least we'll all be within the same equilibrium of profits, and there won't be some people that get screwed over and some people that make a buttload of profits, and we won't have that disconnect. Everyone will be working together as a team, and we'll all feel safe in dumping it, because if I give a call order to dump it at XYZ and someone got into the party a little bit late and their price is a lot different, then I'm not gonna want to call that dump, because I don't want us dumping on one another. That's not cool. Um, so just have a little bit of patience. It may take a few hours or whatever the case may be for these R bots and for people to take profits. It may take some time, but in trading, 2 hours is not long at all, at all. Um, and the same thing goes with panic dumping, with selling. That's FOMOing in. Now with panic selling, if I say, oh, exit the market slowly, it's not dump it all right now. It's exit the fucking market slowly. And there's multiple reasons for this. You don't want to break TA. If you break TA and have like a little dump uh, candle, break the supports or anything like that, then it's gonna scare off the bulls. It's gonna scare off the traders. Um, they're gonna see that the support was broken and they're not gonna want to buy in, and that's not good. You want to tire out the bulls by setting sale orders, and not your entire stack all at once. By setting sale orders little by little. I mean, when I was selling freaking Monaco, I had 55 Bitcoin in there, I was setting sale orders at like 2 Bitcoin each. And yeah, it took a little while, but I got out with pretty decent profits until, I fucking bet it all and basically lost it. But but it may take some time if you have a large stack to play with. But that's just what you have to do. Usually the rich people, the whales, they don't do it manually. They usually have robots to do this type of stuff for them. But you want to set sell orders to slow out, to tire out the bulls. So once you start setting these little slow sell or these small sale orders, and people are still buying because they're still FOMOing in and they think it's still a good thing, oh, the TA is looking fine. Oh, the news, like if you decide to, hashtag or quote unquote sell the news, whatever, then the bulls are still pushing and pushing and pushing and pushing. And remember, their loss is your gain. So you want to make sure that you get out at the best price possible and hand off your bags over to them. It may sound evil, but that's the name of the game. This is a zero-sum game. For us to be winners, there has to be losers. if we all dump on one another and we break TA, there will not be any losers except for us because everyone's going to start holding bags and you're going to get out of the market at a lower price than what you should have. Um, and then also arbitrage bots, same fucking thing. If people decide to just all out dump the market, huge fucking Vader candle, and you're stuck on the sidelines because you weren't able to sell out, just give it some time. The freaking arbitrage bots are going to start eating up a bunch of orders. Just put your orders like halfway through the red candle, because arbitrage bots are going to eat up all of those orders, and then just buy it here, sell it in Poloniex or wherever else, and then just transfer it all over and just do it over and over and over and over again. They do it all the time. That's how all of the markets equalize with one another. So if you see that people are panicking and dumping, don't fucking join in the party. Just be patient, place an order, and let it get filled. Don't fucking panic. Don't panic. Cool? Cool.